I want to just, as we're waiting for people to log on, just give me a little snapshot of how your day's going. Are you looking at deals or what? Anything interesting going on for the day?
Yeah. So for me, there's three things that I try to do in the business. I try to eliminate all the minutia and whatnot, but I try to focus on generate leads, make calls, make offers.
Make offers.
Those three things, because I realized at some point in this journey that anything else besides that I'm doing, it just distracted me from what actually produces results. So most of my day now is spent generating leads. I don't want to do like the cold call thing. That's a dreaded path for most real estate investors.
Yep.
I want people coming to me saying, "Hey, will you help me with my house?"
Mm-hmm.
So I'm figuring out new ways to get in front of people and mostly focused on the whole digital world, and that's what I've been doing. So today, first half of my day, other than a meeting with our team, I've been working on leads.
Nice. Nice. Well, today we weren't necessarily trying to offer you guys anything. Unless Nate, I guess I could throw the link in there. Nate, you think I should put it in there just in case somebody will be interested in finding out more about what you offer, maybe?
Yeah, if anybody wants to know, sure. But today we want to help.
Yeah.
You want to know about the whole the due on sale clause? I've been a couple rounds with that due on sale clause.
Really?
Yeah.
Interesting stuff.
I've actually had two banks knock on my door, metaphorically speaking.
Mm-hmm.
One of them actually called the note due straight up, and the other one threatened to call the note due, and I talked him off the ledge. I'll tell that as we get into the context.
Yeah, let's do it.
Yeah.
Let's do it. So I remember my mentor said, Chris, man, the only way you're going to make money in real estate is making offers. That's kind of when I had a paradigm shift. I'm presuming somebody put that in your head too, Nate.
Yeah. And not just one offer, but you got to make multiple offers. Yep, exactly.
Yep. Roundup, do not get discouraged. This is the business. You got to make a lot of offers, period. You cannot think you're making 1 or 2, 3, 4 offers and think you're doing something. I like to Nate just share with his philosophy on making offers. I mean, no doubt you're putting out a bunch of them.
Yep. It's leads, calls, and offers. And I would add one caveat to the offer. The offer has to come from a place from the heart. It can't be like, I take everything, or I'm just giving you this lowball cash offer and I'm out the door. It's got to be something that the seller, they connect with you. They say, yeah, I understand why that's the path. That's the best path for us. Like everybody talks about the cliche, like win-win, but really, like when we're meeting with the seller, we've got to understand their circumstance. Some of them need the cash. Some of them, they'd prefer to have the monthly payments. Everyone's a little bit different, but the offer's got to come from the heart.
Yep. Roundup. Thanks for joining us. We got about 56 people here now, Nate. I think let's get rocking and rolling.
Cool. Awesome. Let's do it.
Yeah. My mission is to raise your financial literacy, Rounduppers. And in doing that, I get to introduce you to winners, people that I've met in my travels, and just through the networking that I have an unbelievable now in my life. I've got an unbelievable network where people refer things. And Nate came, I guess I was introduced to Nate. He was introduced to me, and it turned out to be a good relationship. And he's got some experience regarding subject 2 today that he'd like to share with us about this due on sale thing. Nate, thanks for joining us, my brother.
Yeah. So where do you want to start with this unicorn?
First of all, Roundup, get your questions. Nate will answer them as we're going through this training today. Nate, let's start with what is subject 2 and how you kind of work that system. So for the few people that may not understand.
Yeah. Yep. So the whole subject 2 thing, most people think it's this unicorn. Like a lot of people, they've heard the term, but they say, well, who on earth what seller in their right mind would ever let you take over their mortgage? So it's this unicorn in the real estate investing world. And there's one more thing too, that some people that are doing the whole subject 2 thing, they're doing it completely wrong. And I want to help shift a couple paradigms today and help people do it the right way by the end of this time that we have together.
Thank you.
Yeah, absolutely. The key for subject 2 and what is it? It starts back in the 1970s. I'm going to give a little history lesson. Don't fall asleep on me. This is not your high school history professor. This is actual real estate investing history and why it's important for subject 2s. Mm-hmm. In the 70s, inflation in this country was going out of control. And what the Fed did to combat the inflation is they kept raising interest rates. They thought, well, if interest rates go up, inflation will come down. And what ended up happening is we got into this huge inflation cycle where bank rates got over 10%, then they went to 11, 12, they got up to 18% by the early 80s.
Wow. Wow.
So it's scary for a lot of people. Like if you were going to sell a house and the new buyer came along looking for a loan and they went to the bank and it was an 18% interest, like
Wow.
Us in our lifetime rate right now, we wouldn't even think about 18%. That'd be absurd. But during that era, that's what's common. So what sellers started doing is they started selling their property. If they had, let's just say that I owned a house in 1979 and I bought the house in 1969, 10 years prior, and I had a mortgage that was at 6% interest, I could then sell it in 1979 at that 6% interest. I'll sell the house and give the next buyer my mortgage. Let them just take it over. And so that's what became the common thing in the late 70s. And by the early 80s, lenders were like, hold on a second here. Like people are selling our loans, essentially. They're selling our loan to somebody else and we're not getting paid for that.
Mm-hmm.
And then they started lobbying Congress and started throwing up a fit saying, well, hey, like we're not going to stand by and let other people sell our loans. Those are our loans. We want to make money in between these transactions. And so they started adding what we know today as the due on sale clause to all of these notes, the promissory notes. Okay. There's two documents in every transaction when we're taking out a loan. There is the promissory note, which we're talking about today. That's the loan agreement. And then there's the mortgage. Some people in some states would call that a deed of trust.
Deed of trust, yeah.
So what Chris and I are going to go through is this promissory note. Banks added this little clause and they're saying like, well, hey, if you sell the house to somebody else and you don't pay this loan off, I have the right to call this thing due. I can tell you I want every dollar of it within a certain limited time period. And that clause it's exactly that. It's a clause. It's not necessarily a law in the state that you live in. Some states have adopted it as law. Other states just use it as a contract clause. Either way, it gives lenders a right to come and harass somebody if they do sell their property and they violate that due on sale clause. Does that all make sense so far?
Yep.
Okay, so that brings us up to 1982. 1982, new administration comes into office. New administration's trying to combat these interest rates. They signed something known as the 1982 Act, the St. Germain Act, the St. Germain Depository Act to be specific. And what that thing did is it started to combat some of these things like the high interest rates and whatnot. But one little thing that got slipped in there, and I don't know who slipped it in, I wish I did, but what got slipped in there is that a seller can transfer their property to a trust for estate planning purposes without triggering the due on sale clause. So this is the vehicle, and we'll talk more about the mechanics of it a little deeper in this, but that's the vehicle that has actually opened up a gate to not have the due on sale clause triggered when we do these types of transactions.
Gotcha.
Okay.
So I'm presuming that when I'm hearing you talk, Nate, you are a trust buyer. You buy and trust.
I am today, but as you, Chris, like I know that you've figured this business out from the ground up. And myself on my journey, I was going along buying houses, using some hard money, and then buying some of them subject to. And then I was 2 months into a rehab, and all of a sudden I got a letter, made my second payment to the bank when I took over property subject to this little cute house in the Powderhorn neighborhood of South Minneapolis. And the lender sends a letter to the original seller, who's no longer the deed holder, but they were on record with the bank. The seller then calls me, panic, like they're calling the note due, like they're coming to foreclose. And I'm like, let me have a copy of it. So she got me a copy of it, and then I read it. And sure enough, it was one of the big banks. It wasn't like a small credit union or anything. And the big bank said straight out, you violated the due on sale clause. We're calling this no due. We're going to foreclose on the property if you don't pay off the balance immediately.
Unbelievable, Nate. I want to know what you're thinking right then and there.
Panicked was the first thing, because I didn't want the seller to get hurt. I didn't want to get hurt. Keep in mind, like a lot of times why we do these is because it saves us a little bit of money up front, because we don't have to come up with money for the house. But what I did have to come up with money for is the renovation on the property. Mm-hmm. And I had borrowed that money from somebody else. So I felt like duly obligated. Like now I'm in a position where not only could the house be taken away from me, but the $35,000+ that I've already put into this property in rehab money, that's not even mine.
Wow.
So I'm sweating. Read the letter multiple times. Tried to call the big bank to talk and just say, hey, give me a few months, like that kind of conversation. But what ended up happening is I just kept getting punted around, and nobody would talk to me because I wasn't the name on the mortgage, essentially.
Well, no doubt you had a a power of attorney, Nate.
This is before I met Chris Haskins, ladies and gentlemen. I was young, didn't really didn't know how to do the whole thing.
All right.
You know how you like search around for stuff, you learn a little bit here and a little bit there, and you don't have all the answers, you just try it. Well, I tried it, and then I quickly, after losing sleep for a few nights, then I ran to an attorney, paid the attorney. So then I'm finally putting in the money where I had to put in the money, and then the attorney coached me through basically what the foreclosure timeline would be, and said, well, here's what the lender's going to have to go through. They're going to initiate foreclosure. They're going to do this. And he laid out the timeline, and he showed me that I had at least 4 months of breathing room before they could actually snatch the property at a very minimum. Okay. And so I said, okay, well, the bank won't even talk to me. They won't reason with me. I just got to get this thing done and get it sold.
Mm-hmm.
And so meanwhile, I'm having conversations almost daily with the seller, because the seller is nervous. They don't want
about that. How did that paint a picture for that, Nate? No doubt they had no idea. I mean, this is like a car crash.
Exactly.
What were they thinking? What are they? I mean, are they looking at you like you're not being upfront? I mean, how is that interfacing going?
Yeah. And I had two parties to deal with. I had a sister and then younger brother. Sister was actually the seller of the house. Mm-hmm. The reason she was selling is because she was moving on to kind of the next phase of life, some kind of assisted living.
Okay.
And then I had her younger brother, and her younger brother was the main guy that was like the guy dealing with me. So when older sister got the letter, she called the younger brother, and then they both called me, and they both kind of pounced. They're like, what's going on? Like, no, you said you were going to make all the payments. You haven't been making them. And I'm like, no. I have made the 2 payments that are due. I've got canceled checks. Like, I've made the payments. I assure you, I've made all the payments. They're like, well, you seem like you're supposed to know what you're doing. You don't know what you're doing. You got to get up off this mortgage right now. You got to pay off this mortgage right now, immediately.
Wow.
And I didn't have that kind of cash to pay off the mortgage like that. So I just explained to him, like, hey, like, let me figure this out. I'm going to get it figured out. We're going to be good. Don't worry. We'll get it figured out. And so then it was almost like a daily conversation over. This is probably a 6 or 7 day stretch before I actually got on the phone with the attorney, and the attorney gave me some peace of mind. Mm-hmm. And then I called them back, and I just said, hey, here's the plan. We will have this thing done and sold. I'm fully vested. Trust me. I got another almost 35 grand into this property in extra expenses. I'm not going to let this thing go backwards. We're going to get to the finish line. Just let us finish this thing out. And so that gave him a little bit of ease. And then we just did it. We pressed the pedal to the metal, man. Like
on the rehab.
Yeah. We were already a couple months in, so we had most of it done, but we had to finish up some buttoning up and whatnot. Got it listed. When the realtor asked me for the listing price, I got the range of the comps, and I intentionally chose the very, very bottom.
Hold tight, Nate. Before we get you out of it, I want to know about the numbers. Are you taking over? Is this $100,000 loan? Are the payments $2,000 a month? Give us a picture of this loan that you took over.
Yeah. It was just under 100. It was somewhere in the 90s.
Okay, so you got 90 grand.
Yeah, and payments weren't terrible. Payment plus tax plus insurance was probably somewhere around like $700 a month.
Not bad. Wow.
Not bad at all. And then rehab 35 grand plus. I was paying interest on that money. Mm-hmm. And then I just had to pay for keeping the utilities on and whatnot during the renovation.
Yep.
And then insurance.
So you've got 90,000 here. Did you add? I just want to make sure my roundup peeps. Nate borrowed another 35. Is that on top of this same house? Are you feeling the heat there, or did you borrow that money somewhere else?
I borrowed that money somewhere else. So
okay.
So on a deal like this, once you have the deed, you can take out a second mortgage. You could put another mortgage on it, and some people do. It just makes it a little tight. If I did it, I would definitely want to explain to the second mortgage holder the whole scenario, just in case the bank calls the note due or whatever, if it was structured the wrong way. But on this one, I just got a private loan from someone, private money, essentially, that I signed a promissory note on. And then I had that money to work with for 6 months to finish the rehab out.
Gotcha.
And then go ahead. Then I got the rehab done. Immediately got the listing agent engaged. When we priced it, we went for the low end of the comps. Said my prayers. God, please let this thing go through. And thankfully, within a couple weeks, we got a solid offer on it, signed it. And the bigger thing, it's not just getting the offer. The bigger thing where I was sweating was, is the buyer going to close on time with their lender?
Oh my goodness.
Yeah. And I learned another thing on this transaction, and that's that when you sell to an FHA buyer, usually first-time home buyers, lower-priced houses, they're using FHA loans.
Yep.
And they don't like when the lender FHA doesn't like when they see quick transactions. Like you bought it today and you sold it tomorrow. Like to them, it's like there's something wrong here, especially when the value jumps. And I had bought it in the 90s, but now I need to sell it for more like 160 to clear realtor fees, costs, and all that kind of stuff in the middle. And so then I got flagged with, they did the first appraisal, and then they came back and they said, well, we got to do another appraisal. You've only owned this for X number of days or X number of months. Mm-hmm. So I was sweating a little bit, and I had to pay for the second appraisal. I remember that. I was kind of grumpy about that, but I had to pay.
They make you pay for it. And that's something they make you pay for it. You can't be like, I'm not.
Oh, what is this? Like, I'm not requiring the second appraisal. You are. But in the interest of just getting this thing to the finish line, I'm like, fine, here's the $500. Let's go. And then we ended up getting the second appraisal. They cleared it, and then they were able to close the transaction. And we just thank God, like, yes, done. Called the seller, told the seller, showed him the payoff, and I was very, very happy.
Unbelievable.
Yes. And then I started learning about the history of the whole St. Germain Act and how to do it right the next time. That's why I know what to do now, and I haven't had any notes called due since then.
Oh, that's cool. Now let me I want to know about what's going on in your mind as you're coming towards closing, and how in the heck did you find an attorney that understands subject to so quickly? It took me so long to find somebody.
Yeah, good question. So I was nervous, especially when they called the second appraisal thing. So I was just like sweating, thinking about it. Like, what if they lowball the appraisal? What if the comps come in and under?
Good.
I probably asked my realtor to run comps like 6 times in a matter of 2 weeks, just because I wanted to know. And then the attorney, I got a little bit blessed there just by good networking. Somebody had referred a title company to me that was owned by an attorney. And so this attorney, he had specialized his whole life in title law. So wow. I brought the problem to him. I was speaking with the closer that I usually use, and then she said, "Oh, you should really talk to Brian. Brian owns the company. Talk to Brian. Brian knows everything about these situations." And so then he got involved, and he just knew everything. I remember actually when I sat down with him, he took me back to the basics. He literally drew on a sheet of paper, A, B, C. You move a house from here to here, from A to B and B to C. And like, he made it so simple on a piece of paper. I'm like, really? Attorneys never talk this simple. Like, you get this. Awesome. I'm working with you. And I did. I worked with that guy. I worked with his firm all the way until I stopped doing deals in Minnesota. Oh.
Was he, when that A to B thing I'm trying to visualize, was that the trust thing where you're signing the interest, or what?
He was actually taking me back to like grade school. This is how you wholesale.
Okay.
So in the conversation, he started drawing ABC, and then we kind of took it to the next level for subject to and what to do next time and all that kind of stuff.
Man, okay. If you're just joining us with the 85 people that are here, thank you for joining us. We're with Nate Armstrong today. We're just giving today. Nate is talking about subject to and how he had a due on sale clause. Actually, I've never had one actually enforced from a lender, and how we got around it. Nate, why do you think no doubt you went over this a million times in your head as it was transpiring. Why do you think the bank even cared? You were making the payments. How did this come up?
Yeah. This is a little bit of speculation, but I'm guessing that usually a bank, when they're getting a performing payment, someone's paying them every month, they're happy. Like, that's the way that their loans are supposed to be. And this one was being paid, but it probably looked a little funny when the name changed. Like, the check was not from the seller, it was from me.
Yeah, but the person taking the check, Nate, they're you're mailing the check in, they're typing it in, and it's over. I mean, they're not reporting to somebody that's looking at who the checks are coming from.
Yeah, you're right. You're totally right, Chris. So I got a little suspicious, and I thought, well, they saw the equity in the property, and they were trying to like take back the equity. Like that thought went through my mind.
Mm-hmm.
I don't know that I'll ever really know what that bank's interest was, but a couple years later, I sold a property that I owned on seller financing. I transferred the deed, sold it subject to somebody else.
Mm-hmm.
And my lender, it was a small bank this time. My lender, the president of the bank himself, sent me an email and said, "Hey, we need to talk." And then
Out of the blue.
Yep. And I kind of figured it was about this property because it was the only loan that I had with him at the time.
Yeah.
I had done a lot of deals prior, but it was the only loan I had in the books with him. So I jumped on the phone with him. His name's Chad. I said, "Hey, Chad, how's it going, man?" And he said, "Well," he's like, "Nate, we were doing one of our standard audits, and they noticed that the title got transferred on the property that we have the note on, and you're no longer the owner on that property. You want to tell us what's going on?" And I'm like, "Oh," and I just told him the truth. I didn't hide anything. Obviously, they knew what was going on. I'm not going to hold anything back. I just laid it all out. Yeah, here he is. I checked his credit. I checked his background. I believe he's going to come through. And if not, you still got me on the loan. And he's like, "Well, it's not okay with us and the board. We talked about it. So we want you to take back the property."
What?
And I'm like, "Okay, all
You
right."
can't do that. You can't do that, right? I mean, you wouldn't do that. Can you do that to somebody?
Not unless you want to end up in court and get.
No, man.
So I went back to the same attorney, back to Brian, good old Brian. "Brian, what do I do, man?"
Help.
And then Brian said, "Well, just kind of let it lie." Well, fast forward probably 3 or 4 months later, the guy that I had in the property, he defaulted, didn't make a payment. And in that contract that I had with him, you get 2 months behind and you lose your contract spot essentially. So I gave the contract to Brian. We gave the guy another month or two to try to redeem. He couldn't. He ended up signing a release agreement and we took back the property. So exactly what the bank wanted happened. Now, I don't think that bank would have ever foreclosed because I had a relationship with them and whatnot. And every payment was being made because I made sure that I made it no matter what. So I don't know that they would have done anything or not. The first bank, though, that was just wrong. They were up to something. I think they were trying to take the equity back. That's what I feel like. It's all in my head, but that's what I feel like.
Yeah. What year was this, Nate?
This is probably my second year in business. So it would have been 2008, 2009 era, somewhere in there.
So my brain is thinking about the climate of the financial market and the real estate market was in turmoil.
Mm-hmm.
Maybe there were more checks and balances at that time than it is today, Nate.
Yeah, that could be. That could be. Because I was thinking the same thing. Like when there's all these other properties they're taking back, why would they go after the one that's actually paying the note every single month? It doesn't make sense to me.
Wow. I'm just imagining how many times you went over this in your head, trying to figure out what's going on.
Yeah, I did. Especially back then, I overthought everything. Nowadays, I try not to speculate as much. Like I take it for what it is and I make a decision and I keep moving. But back then I was dwelling and dreaming and losing sleep and everything.
I bet.
Yeah.
I bet.
Hasn't happened since though. Those were the only two after hundreds and hundreds of transactions. Like it's the only two that I can speak of that have ever made the big old lender grumpy.
So give me a snapshot of what your deed looked like, Nate, back then, as opposed to what your deed may look like today from a rounduppers that, because you're saying trust all this craziness that some people may not understand. Were you buying them in your name then or an LLC or what did you do back then?
Yeah. That property, the South Minneapolis property specifically, I deeded that to one of my first entities, Calhoun Ventures. I deeded it over to that entity. And that was it. So it was just a straight up quick claim deed right to my entity. Nothing.
Oh my goodness. You did
Yeah, that was wrong. Don't do it that way. Okay. That's
asking for it.
Yeah. That's like when you go onto YouTube and you search and you get like half the answer, but you're not willing to pay someone to give you all the answer. Well, that's what happened to me. Yeah. So I got my big old smack from the bank and had to lose sleep for a couple months, but now I'm here. I'm here to tell the story. Now today, okay, let's fast forward. So
Hold on, before we leave there, I'm sorry, Nate. I got so many quick claim deed. You can do a quick claim deed. Know that you did it. But you're saying, I just want people to understand we
oh yeah,
possibly should not do a quick claim deed with buying subject to. I want to just could you just kind of drive that home a little bit, Nate?
you're right on, right on. You can do quick claim deeds just when you're taking over someone else's mortgage. They're a little bit of a risk factor.
All right. Okay.
Okay, so this whole concept of subject to the right way, okay? St. Germain Act, 1982. We'll go back in time. Inside that act, the legislation says that just because these lenders can now do this due on sale clause, it doesn't mean that they can trigger it when someone takes their own property and transfers it to a trust for family planning estate purposes. So that's like the one big caveat. So hypothetically, and I'll just talk hypothetical so that this point gets driven home. Hypothetically, what if I owned a property or you own a property and you had a bank loan on it, but you wanted to pass it on to your children without having to go through the headaches of the whole probate process? How could you do that? Well, you put it in a trust and you have either beneficiaries or trustee, depends on the state and how you structure all this, but you have whoever you want to have controlling interest of that trust, you name them in the trust agreement. Okay, the trust docs. And now you can skip probate, transfer the property to them, and not have headaches. And that would be okay because it's for family planning or estate planning purposes. Now, hypothetically, let's say you got that property. You've already transferred it to the trust. Something changes and your kids don't want that property. Is there anything that says that you can't sell that? I'll just call it the beneficial interest of the trust to somebody else. There's nothing out there that I found that says that you can't do that. Now, if an attorney were here, and I'm not an attorney, Chris, I don't think you're an attorney, are you?
No, we're not. No advice.
So you want to go to your attorney to structure this stuff. Okay. But let's say you take this to your attorney, you say, hey, I can buy this trust, the beneficial interest from this trust, from this person that's already transferred it to the trust. I can buy it. Is this okay? And then they can help you structure that. Now, that hypothetical that I just described is what I do now. It's what my attorneys have advised me to do. So rather than me just quick claim deed the property over to my LLC, no. Let's take a step back and let's follow what the guidelines and the intent of that 1982 St. Germain Act are. Let's set up this trust structure. Okay. So there's a couple steps to it. It's seller puts the property in a trust. And then secondarily, your attorney helps you with taking over the beneficial interest of that trust.
Taking over so it goes into the trust first, and then you buy the trust in essence.
Exactly. You got it. Yep.
Into the trust. Roundup, y'all getting that? Into the trust. Nate buying the trust. Not buying the house, buying the trust.
You got it. Yep. And every state's different. So you definitely got to sit down with your attorney to structure these deals. Yeah. I even to this day, I know what I'm doing, but I still use the real estate attorney to structure every single one of these.
Nice. Are you even skeptical when you're buying subject to where the person on the note has moved on to the afterlife, Nate? Are you still squeamish with that too, or are you more a little less, I guess, concerned about those type of deals where the person is not even around anymore?
Yeah, great question. I haven't had a transaction where the person's in the afterlife when I'm taking over a mortgage, but it does bring up one more point that I'd like to throw out there for all the Roundup members when you go to your attorney on this. And that's that the word subject to in some states has become a bad word.
Yeah.
And it's because there were some unscrupulous investors that they took over properties subject to, and then they didn't pay the bank. They told the seller they'd pay the bank and they never paid the bank. And so what happens is that when some bad actor does something wrong, it gets thrown into the higher levels of the state court system, the district attorney, and then the district attorney then starts prosecuting anyone that they think is a bad actor. Mm-hmm. So for that reason, a lot of investors have now switched over to another tool that's accomplishes the same thing, but it's very different structure. It's called a wraparound mortgage or a wrap mortgage. Do you use wraps, Chris?
I have not yet. I mean, I have used them with other transactions regarding just dealing with the seller, but not on a subject to where the person's letting me take over the payment, and I haven't done that.
Got it. And I'll hit it only one more time and I'll shut up about it. But when you get a seller that's like, hey, I'm in, like, I need your help, take over my stuff. You go to your attorney at that point and you say, hey, help me structure this thing. I got a seller that's saying yes verbally. I don't know the right docs or the right procedure to put in place. This is kind of the structure I was thinking of. But your attorney then will pull out all the disclosures that the seller should sign and structure it the right way with you. That's the value of a good attorney on these deals.
Wow, you have met an attorney that actually will have the docs.
Well, I for Minnesota stuff, I still use Brian, and
Okay, this
and
is
and I feel like every state that I've gone to, like we hunt for that title company and or attorney relationship first,
mhm.
because you're right though, Chris. Most don't. Most, like, if you just call up any Yellow Pages attorney and start asking them this stuff, they're not going to know. But if you get an attorney that specializes in title law, then they know this stuff. They got a
But
special.
me, we're talking about how many people in the attorney community even do that. I mean, I feel like your guy Brian is one in a million.
Yeah, there's one little trick to it. The trick is that a lot of times title companies are owned by an attorney. And so if you call a title company, and like half the states are title, half the states are attorney states. But if you're working in a title company state, the title company that you call, first off, you figure out, do you close investor type transactions?
Yep.
Like, if I buy a property and sell a property in the same day, can you do that? Okay, great. Cool. Is there an attorney on staff in your title company? Sometimes the answer is yes. Sometimes it's, no, but the owner of the title company is an attorney. Awesome. Can I talk to him or her? And
Okay.
that's who I found to be the most creative attorneys that
Gotcha.
understand the stuff.
Gotcha.
Mhm. Yeah, there's a lot of data. We're getting into the weeds a little bit, but I hope this is coming out. And load your questions too, because I want to make
Oh
sure
yeah.
that we understand this stuff.
Roundup. I know Nate kind of got a little high level there, but I'm presuming that the majority of my rounduppers kind of understand subject to already, and I'm just I love hearing about the stories of what could possibly happen because this is very unusual.
Yeah, it is. And to simplify this whole concept a little bit, I want to tell the story of my dad selling his 1977 pickup truck. So my dad put his 1977 pickup truck out for sale. He put it up for sale for $3,000, and that was over market price. And market price for that truck at the time was probably $2,500. He had a few people come in and give him lowball offers, but he was like, "I'm 3,000's my number. That's it. I won't go any less." How many times have you met with a seller of a house that their number was their number? It didn't matter what market value was. Like,
Yep.
they ingrain it.
Mhm.
Well, to my dad, he wasn't moving. Okay. At that time in my life, I was doing a painting business where I literally painted houses to pay for school.
What?
And yeah, that's how I paid for school. And I didn't have a truck. I really wanted a truck, couldn't afford a truck, but I really wanted a truck so that I could get bigger ladders and get bigger paint jobs and make more money. So I started thinking, and I went to my dad and I said, "Dad, hey, how about this? I don't have the 3,000 that you want today, but I know that if you sell me that truck, I can make you monthly payments because that truck is going to let me get a couple bigger jobs, which will pay for that truck." So my dad, once he heard 3,000, the rest of the numbers didn't even matter. Like, there's 3,000. He got it. He's happy. He shook my hand. We signed a little piece of paper on it, and I made him payments. Now, why would I pay over market value for something? Why, even those sellers that we just talked about, that they get stuck on a number? Well, sometimes paying over market value, like if I can get a house for $100,000 subject to a payment, like the mortgage, that the payment's only $700 a month, and I can rent that house for $1,100 per month, I can make money off of that overpaying for the house. Same thing with my dad's truck. I could make money off of his truck by making him monthly payments on it. I'll do it. I'm in. Let's
Mm,
go. So
nice.
so I just want to simplify that example a little bit, because sometimes you'll sit with a seller and they'll get really ornery about their number. Like, their number is their number, and you can still give them their number. You might just stretch it out for 30 years on a payment plan, and maybe make the interest rate a little bit lower, and it'll end up working out in better to your favor than theirs per se, but you'll still give them their number.
Nice. Kind of a give and take situation in your negotiating toolbox.
Yeah. Yep. You got it.
Nice.
You got it.
Rounduppers, we got 85 on here now for my, if you're just joining us, we got Nate Armstrong here. He's talking about the ins and outs of subject to and the due on sale clause. Nate, for people that are scared to death to buy a house based on the due on sale clause, what can you put them at ease? And give us some numbers on like how many, I guess this is 2 you've seen out of how many, Nate? Because my mentor has done hundreds of these things. Even, Ron and Bill Brunson, hundreds of these, closings. He's a closing attorney in Denver.
Yeah.
He's seen it one time, and here you are seeing it twice.
Yeah, I had one really called due and one threatened. They huffed and puffed a little bit. I've had some blessings. I've had my ups and downs in this business, that's for sure. But when we really got into good momentum, we had 3 years in a row where we broke the 100 deal per year mark. Not all of them were subject to, but at least a good handful. Each batch of houses that we took in were subject to.
Mm-hmm.
It's very rare when that note gets called due. It's very, very rare. And if you follow the intent of that law that I just described, working with your attorney, and you follow the whole trust strategy, it even diminishes your odds even more. Like I've never heard of someone that's actually had the note called due that follows the trust strategy.
Nice.
I'm sure it exists, but I've just never heard of it out there.
Get your questions in the chat box, Roundup family. I got one more question, and then we'll get to you guys. Nate, as you're doing this for my Rounduppers, I'm trying to make sure I want to frame this up right. Should they be nervous or leery about still doing subject to, Nate? Because I know some investors are like, I just don't do it. I won't do it. I have another mentor that just won't do subject to. Or are you just for what makes your gut? Do you feel squeamish about doing it anymore, or is it still something that you use?
No, my gut says I'm excited. Let's go. Whenever my acquisitionist, whenever she comes to me and says, "Hey Nate, we got a potential deal we can take over." Now from just a simple term change, this might help anyone that's feeling squeamish. The word subject to, Chris and I were talking about how that sometimes gets targeted by different states. If they don't like that term, then maybe you don't do a subject to. Maybe you do a wrapped mortgage,
Gotcha.
which accomplishes the same thing. It's just structured a different way.
Yeah.
It's kind of like after my painting business, I started a business where I was doing renovations for other investors and basically a general contractor. Well, I built that business for a couple of years. And then after I built it for a couple of years, I wanted to focus on my own real estate investing business. So I found someone that wanted to buy my company, my LLC. Well, when I was getting ready to sell this LLC, like I had never sold a business or a company before. And so I went to the attorney and I'm like, hey, how do I do all this stuff? And I thought I was like selling a business, like here's a business, buy this thing. But really what I ended up selling at the end of the whole thing was a piece of paper that transferred my member units from the company to the new buyer.
Wow.
So it's just a piece of paper. Like there were no like company sale. It was a piece of paper being sold. And so sometimes it's just the structure in our mind. So subject to that structure, it might have some bad words associated with it because some states have kind of made it a bad word. But a wraparound mortgage, gosh, that's one of the simplest transactions when you understand it to do. And it keeps everybody in a good position, favorable position. Like wraparound mortgage, man. That's what I'd ask your attorney about. If subject to is a bad word for you, go to wrap.
I'm thinking so much. I could talk to you all day, Nate. How with the people that are looking for these type of attorneys, I feel like you got so blessed having an attorney. Not only did he understand the transactions, but he also understand trust. I mean, that is really rare.
Yeah. Okay, I'll give you the headcut, the shortcut too. So one of the ladies on our team, she's been here for 7 years. Like she's so awesome. It wasn't just the first title company we called happened to have an attorney that was that perfect person.
All right, give us the meat.
Yeah. We probably call 15 to 30.
All right, now that's the secret.
Yeah. every city we've ever done business in, that's the first order of operations is we got to find the right title company and attorney. And she puts them on a Google spreadsheet and she just calls them all. And when one says, no, we don't do that, then she says, well, hey, do you know a title company that does do investor transactions? Great. Referral. And then that list, eventually we get down to 31 out of 30 is going to be the right one, usually.
30,
but it's work. It's work.
Well, I don't want to minimize, but people think that they're just going to pick up the phone and call their local real estate company and just go close the deal. And I don't want them to have that in their mind. That's all.
Hey, I'm so glad that you do that, Chris. Like you and I were talking a little bit before we jumped on too, that when we follow up with sellers, Chris is working on a deal right now. He met the seller. She showed some interest. Now she's backpedaling a little bit. And Chris and I were talking about that. It's actually the 5th contact or more that generates 80% of the deals. 5th contact. There's a stat from Pro Sales Corp LLC. You can Google search them, but they publish this big thing. And in our line of work, it takes 5 or more contacts with the seller. Now, it'd be easy for Chris and I to say, yeah, first call, no problem. But no, we're following up, follow up. It's work. But the work brings the results.
Yeah, I think we say it very rarely happens for me that I do a deal on the first touch. I have done it, but very rare.
It's like the one-handed touchdown.
Very rare. Round up, get your questions in here from Nate. I've had you for 40 minutes, Nate. Let's see if we have any questions going on here, brother.
Cool.
Make a payment. If you are enjoying what Nate has just dropped on your spirits, please hit that like button. Smash that thumbs up. C.S. Chesson. Yikes. Where did this happen? I hope not Indiana.
So Mr. S. Chesson wasn't Indiana. It was my original home, Minnesota, right in Minneapolis, South Minneapolis in the Powderhorn neighborhood was my first due on sale clause that got called due.
Cool. I would love to have known you then to see the sweat that was dripping off of your brow, my friend.
Yeah. I still have my hair.
Yeah. Awesome information. Hey, U.S. Land Ventures. Hey, what's going on, Barrero Brothers? Wrap mortgages do work. However, many title companies don't want to touch those. Wonder why that is. Nate, you here to chime in on that? Yeah,
that's probably in U.S. Land Ventures. Thanks for that post there. Wrap, we should spell, if you're Google searching this, WRAP. And they do work well. Most title companies probably won't touch them because it's not the right title company. That's, again, where we got to call probably 30 to make sure we get the right one. And there's probably, outside of like us not knowing the mechanics of a deal, if we work with the wrong closing company, it can, awful
headache, dude.
Like
you're teaching them all day. Like, okay, seminar time. Every time you pick the phone up, you're just doing a seminar.
Yeah. The first time that I had started with my fix and flips, kind of like the South Minneapolis house, and then I wanted to try wholesaling, and I came to my title closer who I'd already done some fix and flips with, and I'm like, hey, I'm going to wholesale this house. And she said, Nate. And I'm like, what? She said, that's illegal. You can't do that. And I'm like, what are you talking about? I just learned you can do assignments of contract. You can double. She's like, no, you can't do a double close. That's illegal. I'm like, oh boy.
Oh, here we go.
Yeah. Got to get the right title company.
Right people, right? It's so crazy. It took me 5 years to find mine. Back in the day, I went through so many. It took me such a long. Chuck T, hey, how can the owner of a deed, okay, that's right, the deed, they own the house, not pay the lender?
Okay, so Chuck, great question. It works like this. Let's pretend that Chris owns a house right now. He's selling it to me, so it means he's transferring the deed. What he cannot transfer is a mortgage. Mortgages that contract the promissory note specifically, he can't just take that and say, you know what, Nate, here you go. You're taking this puppy over. Because they have clauses in that say you can't transfer it. Kind of like if you read the fine print of your Visa card, Visa is saying you cannot assign your debt to somebody else. Like it's just never going to happen. So what can happen is the deed can still be transferred. So Chris can transfer the deed. He just can't transfer the debt, the promissory note. So all that I'm doing now as the new deed holder is in my agreement that I signed with Chris, I said, you know what, you transfer the deed, I'll keep making these payments. I'm writing the check to the lender. So it's not that Chris can't do it. Chris could do it, certainly, but because he made that deal with me, he wants me to do it. I now have the deed, so I can write that check. Anybody can pay anybody's mortgage. If you want to go make someone else's mortgage payment tomorrow, even if you're not the deed owner, you could.
Yeah, you sure could. I tell my inner circle members all the time, they don't care. I just can't imagine the people, they're making $10 an hour, Nate. You're mailing the checks in, they're opening up the envelope, they're typing the payment in, and then they're shredding it or they're scanning it, right? I mean, is that pretty much how it works?
Yeah, I rented a condo once in St. Paul, Minnesota. That the owner in my lease agreement, she had me write my rent check was her mortgage payment, and she literally had me write my rent check to her mortgage holder, and I sent it in every month. That's how I paid the rent.
We pay some of our, let me ask you, Nate, we pay some of ours electronically. Do you do that too? Some of our subject to stuff.
Mortgages, yeah. Yep.
We'll just pay it right there. Round up, get your questions in for Nate Armstrong talking about subject to today. One of my favorite ways to buy. Matter of fact, my favorite way to buy a house. Is this your favorite way to buy too, Nate?
I'm by far the most excited about when I can take over financing because it makes the deal much better. It's like the only way that a cash deal is exciting is if you're buying it super
low. Yeah.
But on these deals, it's like, I don't have to bring cash to the table. Like, really awesome. Like, I don't have to go and spend money and I can acquire this real estate. I love taking over the financing on properties.
Nice. Hey, Sarah, does the seller have to set up the trust or do you set it up? If they do they stay a part of the trust for the lifetime of that loan? Nate, good question, Sarah.
Yeah, Sarah, your critical thinking hat's on here. Okay, so Sarah, the first part of your question, do they set up the trust or do you? Technically, the seller does. And again, this is attorney time. You're going to sit down with your attorney and your attorney is going to help structure this. But the way my attorney does it is the seller technically sets it up. But you know who in real life does it for them? My attorney. My attorney does it because we're going to make sure all the documents are right and all that kind of stuff. Okay. The second part, if they do, are they staying part of the trust for the lifetime of the loan? No is the answer to that. They are not staying part of it. They're what my attorney typically does is has them assign their beneficial interests of the trust over to me. Now, there's also this name figure called the trustee. Sometimes it's the attorney that's the trustee. Sometimes it's an entity. Your attorney will help you structure that part of it. But one way or another, the control of that trust, my attorney has transferred over to me once I'm stepping in, making payments, and we close on the deal.
You don't have anybody that's squeamish about selling to a trust, Nate, when they come into the closing? Nobody's saying, hey, what is this craziness?
Yeah. So early in the process, yes. The first time that you start to go through and explain the whole structure to a seller, most natural reactions for a seller is, well, and I'm glad we're going to talk about this too, is, well, what if you miss a payment? Like, I don't know you. And they'll have reactions like that. And I can tell you this, that what it really comes down to in that conversation is how much confidence you build with them. That's what's going to be the determining factor. I've watched hundreds and hundreds of students come through and we've helped them. And the ones that get it are the ones that they study this stuff, learn it really well. And then when they're sitting with the seller, they explain it really well. And that builds trust with the seller. If you think about it from the seller's perspective, they should be skeptical. Like, this is probably the biggest financial move they've ever made in their life. Chris, can you think of for most the average U.S. person, is there a bigger purchase than a house?
Other than college debt, brother, this is it.
Yeah. So this is a big financial move, and whether they say it or they don't say it, they're thinking it and they're worried about it. So it's building rapport with them, building a little bit of authority that you're going to be there to do what you say you're going to do. So how do you do that? You're probably wondering, like, I'll tell you one thing. It's not using the old way of thinking. Like the old way of thinking, like it used to be submit, offer, zip your lips and just wait. And you're the tough investor. No. That doesn't work anymore. We got these companies like Zillow is buying houses, Open Door, like iBuyers, we've got hundreds of other investors, and we've got people that will sit down and have real conversations with sellers. And if you want to build rapport with the seller and get into a property that you can take over the financing on, you've got to be willing to build that rapport. Doesn't mean you have to be a smooth talking salesperson at all. It just means you got to be you, authentic and real with them, and lay it out there with them.
Nice. Good one, Nate. Round up, get your questions in, Nate. I've got you here for, it's 52 minutes. How we're looking on your time. I know you're running crazy as usual.
I wanted to make sure I made time, Chris. So I'm here, man.
Okay, cool. Round up, get your questions in for Nate. Guys, just going over subject 2 and talking about the due on sale clause. Melvin, what did you do when the seller asks for a brochure? I'm presuming something about your business. What do you think about, I don't
Yeah, Melvin, I've had this question come in a lot too. And nowadays they ask like, what is your website? And this one, I'm going to defer back to the last answer a little bit. It often comes down to your confidence and the seller's confidence in you if they're starting to ask questions like that. But I always tell the truth. A friend of mine in grade school, his grandfather taught us both a lesson that if you always tell the truth, you never have to remember what you said. Okay. So I remember that forever now. And so when you're sitting with the seller, the last thing you'd want to do is say, oh yeah, if you're not something, you wouldn't want to pretend that you are, because it's going to eventually hit the table. You don't want that. Instead, you just say, hey, if you don't have a brochure, if you don't have a website, then you just say, hey, I'm a small local investor. I prefer to keep things simple. I don't need to have a big fancy office or have a bunch of overhead. What I do is I help people just like you. Now, you wanted 197 for your house, right? When did you want to close?
Get them back on that train of thinking.
Yeah. Yep, you got it.
I like the way you did that, Nate. You're a master. You're a master. Get it back on, focus the conversation back on them.
Got it.
Good one. Kwame Barton, what's up, my friend? What are the cons if I acquire a property subject to and then as the new deed owner, I put the property under my own land trust?
So Kwame, I'm thinking through, I'm putting on my non-legal attorney hat here. What are the cons if I take over this property subject to and then I deed it to my own trust?
Well, he says, as the new deed owner, put the.
I don't see any more problem. Like, I don't see a problem down the road from that. The initial transfer, if you transferred it to your entity or to yourself, that's where I had the due on sale clause triggered. So once you're past that event, I don't see like the bank hunting you down and all that kind of stuff for that, but they could for the first event that you did. It wasn't what you did. It was that the seller violated their due on sale clause in the mortgage. Gotcha. The seller, if they really wanted to follow the flow of the law, they would have put the property in a trust first.
Yeah, I think here, Nate, I don't know if let's think about this. A lot of people are buying houses with a mortgage in their name. I understand that. I've been there. And then want to transfer it over to their trust. I think this might be just someone owning it. I go ahead, Nate. I'll let you go from there.
Okay. In that case, what the St. Germain Act is, and before you do this, you talk to your attorney, but what the St. Germain Act is one of the clauses, and it says that for estate planning and family planning purposes, you can transfer to a trust and not trigger the due on sale clause.
Nice. Garn St. Germain. That's crazy. I haven't quoted that in so long. Sarah, do you guys put all of your properties in trusts or LLCs if it's a buy and hold?
What do you do, Chris?
Listen, if you cut me a land trust document, it's going to come out of my pores, man. I don't put anything in the LLC. That's just me. Because, my LLC can be to me, why would you do it when you can make the LLC the beneficiary or whatever? You can layer this thing as deep as you want to go.
Yeah.
What about you, Nate? I don't know, man. Everybody's different, though. I don't think anything's right or wrong, good or bad, just different.
Yeah. So I got a third year of business, roughly, got a private money lender partner who was interested in going a little bit bigger. So he said, okay, we're going to form this company and we're going to use my attorney for everything. And his attorney literally had us form an LLC per property that was owned by the parent company.
The
In
series, is that a series LLC you're doing?
some states, yeah, like Illinois, Florida, a handful of others use series LLCs. We were in Minnesota at the time, so there's no series LLC. So
Gotcha.
it was just one LLC that owned each child LLC, parent LLC, children LLC.
Good gracious.
And the paperwork was immense. The attorney fees were immense. I understand why the attorney wanted it that way. Like, it's a lot of revenue for the attorney. And this private lender was serious. Like, it was a blessing from God. I did a couple small deals with him, and they both went really good. And then the next time I sat down with him, he said, I've got enough funding to do 60 some houses. Let's go. And like, he just wanted to go. And so we were forming these LLCs, and okay, so the end of the year, we paid all the legal bills, but what even hit us harder was bookkeeping. Imagine this, like, you got to treat every business as its own business. And if you commingle money, you pierced your own veil. That's what attorneys would most likely tell you. And so we had to have a separate QuickBooks account for every entity.
Oh my Lord.
Like, if I needed something from Home Depot for one house, I could not cross money from the other house. Like, it was a nightmare.
Don't you have to do every year renew the LLC license?
Yeah, renewals were insane. And then the kicker was the CPA bill. So CPAs usually bill per entity that you have. It's not like, hey, these are children entities. No, these are entities. And so we got a massive CPA bill at the end of the year. And then my private money partner on it came back to me. He's like, holy cow, this is insane. We're not doing this. And it was like $40,000 for the CPA.
Oh my goodness.
Insane. So it wiped out a large chunk of all the profit that we had made on that.
Yeah.
And so then that day forward, we started doing 5 properties per LLC. We made different structures for it. Nowadays, okay, fast forward a decade later. Nowadays, what I'm doing is I'll do the trust structure when I'm taking over someone's financing. So it's a long-term property trust structure. If I'm just doing my regular quick wholesale, it's an LLC.
Gotcha.
And I don't have a legal reason for that. It's just, that's what I do. Some attorney told me it that way at some point, and I do it and stick with it.
Sounds good. Sarah, I hope you answered. Nate, I think people ask me this all the time. They ask me this all the time. And I'm like, what you're doing is exactly what you did is exactly the reason I don't promote doing a bunch of LLCs. Nate, I'm just imagining how much money you spent on. You had not only legal fees, but you had CPA. I mean, it was just ludicrous.
And a full-time bookkeeper. It was a full-time job to keep up with just those entities. Like, it's insane.
It was crazy.
No, thank you.
Melvin, what about when a seller asks for a brochure? Oh, we went over that one. Sorry about that. Stuart, hey, Buffalo. Chris, hope you're well. I am. Thank you. No one says how they record the deed or the trust or deed. That's a good one, Nate.
So for recording, everything that I sign is with the title company, and then the title company does the recording for me.
Let them do it.
It's the way you do it too.
Let them do it. Yeah. I mean, I've said, shoot, I bought houses at the kitchen table, Nate. I mean, I sat down with the seller, boom, signed the deed, having mobile notary. You don't want to do that all the time, but you just let them do it. Ron LeGrand says, get out of the way of what the experts do so they can do what they do best.
Yeah, good one.
Bay Area, hey, great info, Nate. Thanks. I was cringing thinking about your tenant buyer not making the payments while the loan is being called due.
Yeah, that Bay Area. It's funny. My wife and I know this. We know the tenant's name so well now because we had the same cringing feeling. His name is Brad. If anyone has seen Brad, let him know he on the way out the door. This is so after defaulting for a couple months and then us trying to give him 2 more months to make things right because he told us he was going to and whatnot. He didn't. Well, 4 months later, he's finally out. His last day there, just to like frost us a little more, he stole the appliances on his way out.
Oh my Lord.
Yep. So I realized what he did in his mind, like he put down, I think like $2,000. It was a simple little condo. Put down $2,000 and he just wanted to get his $2,000 back or whatever. So I took the appliance and then I brought it to Brian, the attorney. And I'm like, Brian, like I want, like, I just as a principal standpoint, like I want this guy I want this on his record. And he's like, Nate, do you really? Like, you're going to chase this guy in court. He's worth nothing. And
Nothing.
you're going to accomplish nothing. Like, you're just going to aggravate yourself with more legal fees. I'll do it if you want, but it's just not worth it. And so I
That's
just let it go.
terrible.
Let it
Yeah.
go.
Get that energy out, focus somewhere else. Kwame, Nate, if you agree on terms with the seller, market number. Okay, with the seller's number. Okay. If you agree on terms with the seller's number that is above asking price, do you still offer the seller to a seller cash or any other incentives? Okay, once you've agreed to their price.
Okay. And it's their market number is above asking price. So if I'm entering the deal over market value, and actually this applies to any deal that I enter, I try not to take a bunch of money out of my pocket to fund the deal. I know I'm going to have some small legal costs to have my attorney draft all the stuff. I'm going to have to pay the title company to transfer everything and record it properly. So I know I'm going to at least have a couple $1,000 depending on the size of the transaction already. So I try not to commit myself to putting more money out of pocket. Now, sellers will try to get you to 100, like 95% of the time, they will say, well, I need some money. And then I will literally look right back at them and say, well, usually we don't do that, but help me understand what are you trying to accomplish? And if they tell me like, well, I need 80 grand, then I just say, hey, I'd love to help you, but I'm not the guy that can help you with that. If they say something like, I really need 5 grand to get to the next house, then sometimes I'll do it. Sometimes I'll structure it as like, hey, on closing day, I'm going to pay for the moving truck. Like, I'll try to assist if it's a small gap that we have to clear. Okay. The other way, and this is one more layer to the deal, is if I'm going to do that and I have to put a larger amount of cash out, like let's just say 3 grand or more, then what I'll say is, okay, well, look, my end game with this, the way that I make money here and I make sure that you get some money, is that I'm going to go find a tenant buyer, a rent to own buyer. So what I'd like to do before closing is I need 3 weeks before closing where I can be showing this property so I can get a rent to own buyer lined up. And then when I do secure a rent to own buyer, I have the rent to own buyer give me some type of down payment. And then I'll use that down payment to fund whatever the seller needed. Does that flow make sense?
Yep.
Okay. Try not to go cash out of pocket.
Yeah, limited. Everybody runs out of money, right?
Yes.
Good question, though, Kwame. You're thinking, brother. These things, you guys are thinking. Roundup. Get your questions in for Nate Armstrong, Mark Archer. How you doing, Jacksonville? Chris, how to get a new insurance policy? Good question on the subject too. And I don't understand, but I said to put the seller's name on the back. Oh, additional insured. I've done that. Nate, how do you do it?
I try to keep the existing insurance policy in place if it's decent. If it's something crazy, then I'm not going to do that. Nowadays, I do what Chris taught us 30 minutes ago, is that I get a power of attorney signed. So then I have permission to call the lender and change stuff if I need to. But I send over the existing insurance plan, address, all the details to my insurance agent. My insurance agent gives us a quote. If that quote's better than the existing, then I'll swap in the new insurance policy. That's pretty much the mechanics of it.
So you keep the existing. Are you an additional insured if you keep the existing, Nate, or no?
I hope that we're doing that, but I don't know. I hope. I hope. One thing that I have, it is a little bit tricky, is that when the insurance is paid from the bank's escrow account.
Yeah, that's tricky.
Sometimes it's a little bit trickier. The power of attorney may or may not get you through the gatekeeper at the bank to change it. You might have to put the seller on the phone with you on a 3-way call to make that change, but you'll figure out a way through it one way or another.
Don't let this scare you, Nate. I don't want to scare my rounduppers to give them some type of paralysis on this. They're scared about that insurance.
Gotcha. Yeah. The insurance is the small detail.
Yeah.
Wait. Who needs insurance? What? Just kidding. That was a joke.
Don't let that scare you. You will figure it out. Shit, Nate. I have houses where I have 2 policies on it. One that it's just there because it's escrowed. I'll never file on it. Another one where if it burns down, with no mortgagee. So if you want to be like, I'm scared insurance, I don't want to have any problems.
Yeah,
So Roundup, if you want to just say, hey, listen, I don't want no problems, just pay for insurance for the seller, keep it on file, and then get your own policy. That way you sleep at night.
I like that.
If you're scared, Ronald Grant said, I'm a wimp. Chuck T, how have you positioned yourself strategy where distressed homeowners look for you versus reserve? Let me go ahead and put your link in there. I'll go ahead and round up. I wasn't going to do this. Nate, I'll go ahead and put the link where you can get in touch with Nate in the video description. Go ahead, Nate.
Cool. So you want socialmediablueprint.com/roundup so I can give them the full training that you helped me get published?
Yeah, we got it. I already put it in. Matter of fact,
You're fast. You're fast. So Chuck, here's how. Number one, you want sellers coming to you. You don't want to go to them ever. Okay. So I see that you know that. Like, you don't want the reverse. Here's how. You have to do marketing to get them to come to you. There's no amount of MLS type of activities with a realtor. There's no amount of cold calling. Those things just will never bring sellers coming to you directly. How do I know that? I've tried them. They just don't work. I've tried to make seller finance offers through realtors. It never goes well because the realtors want to get paid big commissions and they talk the sellers out of it. Now, when you do marketing, literally to get sellers to come to you, then the table's completely changed. The positioning is changed. Now the seller's coming to you asking you for your help. How do you do that? Well, what I do is I use social media. I had a spot in life where I got really pinched. I got into a development deal and the development deal didn't go well. And I had to come up with a lot of money really, really fast. Otherwise, the bank was going to start taking stuff from me. And so to come up with that money, I started wholesaling houses as fast as humanly possible. How did I do that? Well, I knew that I needed to bring in a lot of sellers to me. And I knew that bandit signs weren't going to cut it. I knew that realtor offers weren't going to cut it because they're just so slow and they're like hard to do. Like, imagine if you had to get 20 deals in a month using bandit signs, could you imagine the amount of work you'd have to do putting out bandit signs?
Thousands.
Yeah. Insane. You'd have every city police officer arresting you for littering. Like, and someone that I knew, thank God, they were using social media. I reached out to them, sort of pleaded with them, paid them to show me what they were doing. They showed me, I figured out what they were doing, and then I got success with it. And then I really geeked out on it. I spent now the last 3.5 years geeking out on social media, making it work for my real estate business. And once you figure out how to make it work once, because it's digital, it's not like I have to recreate the same work thousands of times. Instead, what I need to do is click my mouse and change my ad spend budget. And then the same filters that bring in 1 deal per month, they'll bring in 10 deals per month. All that varies is how much I give Facebook to show my advertisements to people that are out there in other social type platforms.
Yeah.
So I would get sellers coming to you by marketing to them, market to them, and then your positioning is completely changed.
Your posture. I love the positioning. I know. Yeah. You want people to just do like this. Once they raise their hand, man, then you can help them.
Yep. You got it.
Chuck T, we weren't even, I promise you, I literally asked Nate to come on here to share the subject too, but I put the link to get in touch with Nate in the video description if you want to see what he has. Is that fair, Nate?
Yeah, absolutely. And if we can help anybody, that link, it's an hour or so training that shows exactly what we're doing. So if you want to learn like what I'm doing in my business and what we had the blessing and opportunity to help Chris set up, that's what we do. It's all social media for real estate investors.
Kwame, Chris, would it be wise to find the right closing attorney that specializes in these subject to deals first before acquiring leads?
Kwame, yes, it would. You don't have to let that be your hang up. Sometimes people sometimes students that come to me, they'll get hung up on things like, oh, I don't have my website set up, or, oh, I don't have my LLC. Don't let everything slow you down. Like I've put some deals under contract before when I didn't even have the entity formed that I put in the contract. Like, because sometimes it's ready, shoot, aim. As an entrepreneur, I'm not saying out there and go and be reckless and do, no, not at all. But I'm saying don't let some of the small stuff hold you back. you can certainly find a title company in a 2-week window if you need to. So you can go put a deal under contract and then call till you get the right title company if you need to.
Yeah, I recommend that. I recommend the deal first. Just look for the deal. I mean, all that other stuff, you can back that stuff up, but it means nothing if you don't have a deal. Tequila, hey, do you buy houses subject to with a VA loan on them, Nate?
So, yes, simple answer. Long answer is I would do them with the wrap mortgage as opposed to subject to. Similar mechanics, just different contracts. VA loan is not much different than any other type of loan. It's not assumable. So we can't just say, yes, I'm going to assume it. It's, you got to structure it so that you're going to be your entity is going to take over making the monthly payments on it.
So why do you do a wrap on that, Nate? Why VA?
I would do a wrap on all of these.
Oh, you do wrap on all of them now?
If there's a mortgage involved, I would rather do a wrap.
Even if, okay.
Yeah. And it was actually Ron that kind of scared me a little bit on it.
Yeah, me too.
He shared an email that got sent from somebody, I think it was North Carolina, but don't quote me on it, but somebody in one of the states got hammered by a district attorney for the subject to. And it's not that they did something criminal or anything wrong. It was just that this district attorney was going after everybody that had that. And it was just a bad word to them.
They don't like it.
Yeah. Texas nailed rent-to-own sellers probably a decade ago. I don't remember how deep it was, but for a long time, rent-to-own was a bad word in Texas. And, you know, it depends on the administration, who the district attorney is, and all that kind of stuff. But wrap mortgages, they seem to be sitting well with most states right now. I can't find case law against them anyways.
Even if the mortgage owner has moved on, Nate, to the afterlife, are you still, does that still concern you with doing a wrap note?
I haven't had it happen to me yet where the owner's moved on. So, but now that you've said it twice, it must be important. So I'm going to hit it with my attorney.
I'm just saying a lot of people, they pass on and then their heirs are like, yeah, I don't care about this loan, whatever. You know, I'm just like, wow, does it matter? I mean, shoot.
Yeah, I could see that. It doesn't really matter at that point. I mean, even if the worst thing happened, if you got hit by a bus and the house got foreclosed on, who cares? Like, yeah, I understand.
Gotcha. All right. Mark, how you doing, my friend? Jacksonville, what do you do? What do you sign your actual name on? Do you put your name on the land trust or is your name on everything? Good question.
So, Mark, for me, and we'll listen to Mr. Chris's answer too. But for me, I get the control of the trust. It's usually the beneficial interest of the trust, and that's the only thing my name goes on. And it's actually not even my name; it's an entity that takes control of the trust. I don't sign anything else. Nothing goes in my personal name ever. It's all the trust. Trust. How about you, Chris?
Yeah, we don't we don't own anything. People, we own nothing. We just control it. We do use a human being for our trust, but I don't even own the trust. We have another entity that owns the trust. So I would just, I can only recommend what we're doing. We're just using. I can presume that Nate's name isn't on anything. I mean, if I did a title search, it wouldn't be there. And that's just a smart thing to do.
Mm-hmm.
And I'm sure Nate has a bunch of insurance, too. I mean, I've got tons of it, umbrella policies and all this stuff, just to make sure.
I do. I never thought that even in the wholesaling business you need to have insurance, but I found out from a lesson in life that you need to have insurance. So you do.
That'll be another seminar.
It will.
Another webinar. You know Nate's gonna have insurance. The guy, I mean, you can tell he does everything by the book. You're gonna be covered. Russell, on the buy side, do you create a separate note for the seller's equity? What are the options when we're making payments on the existing mortgage as well as the seller's equity? Good one.
Russell, man, yes. Okay, so let's put this in context. So Russell's got a seller. The house is worth $200,000. There's a mortgage on it for $100,000. So there's $100,000 in equity. Okay. Yeah. And let's just say you're negotiating with the seller and you settle it that the seller thinks that they should get paid $50,000, something like that. I'm just making up numbers. So now we've got $100,000 mortgage to the bank. and we've got 50,000 that's owed to the seller.
Yep.
What I would typically do with those is I would create a second mortgage on the property for $50,000 in favor of the seller. Now, when I'm making that monthly payment each month, I'm going to make one to the bank and I'm going to make one to the seller for their equity. Now, some people will say, well, oh, gosh, I want to get paid my 50 grand up front. And then I explain to the seller, well, hey, if we're going to go the cash up front route, that's going to cost me more. And therefore, I wouldn't be able to pay you this higher number. I would be down here with my number. But if you want me to get up here with my number, I can do that. But you just have to understand that I'm going to make my monthly payment to you over time, and I'm going to pay it off over time. Do you want to know? Do you want to know the really good words to say for that?
Hit it. Yeah, hit it, Nate.
Okay. I usually tell a simple story. If you've got a story that you can tie to this, it makes it the most powerful. But what I say to the seller, it's totally true. It's, hey, do you remember the last time that you got a chunk of money, what you did with it?
Oh boy.
How long did it last? And then usually it's gone. Like when we're getting a chunk of money, it's gone before we even get it. And then I say, well, how about this? I can make consistent, reliable monthly income check come to your bank account every single month for the next 10 years. How would you like that?
I like the way that sounds. Tell me more.
Yeah, well, here's what we're going to do. Instead of you getting 50 grand all at once, I'm going to make this with interest on top come to your checking account magically every single month. Here's how I'm going to do it. Boom, boom, boom.
Boom, boom.
And that right there. And then the other one, like I just had a guy on a $615,000 property that he owns free and clear. And we settled at a $550 purchase price. There's no bank mortgage whatsoever. That's free and clear. And so I've got to pay the $550 to him. And for that one, he wanted the money up front. Like he was pressing for it. And then I said to him, I said, what would you do with the money even if you had it? He said, I don't know. I'd probably put it in the stock market. And I said, you put it in the stock market? Did you see what just happened in the stock market? And then he kind of backed up a little bit and he's like, well, what do you have in mind? And I said, well, this house, we both mutually like this house, right? Like you've had this house for a long time. This is a safe asset. Do you think that this asset's going to drop 30, 40% in value overnight like the stock market did? No, I don't think that's going to happen. Neither do I. That's why I'm willing to make these payments to you every single month, make consistent, reliable income payments to you every single month for the next 10 years. Here's how that would work. And he said, yes, we agreed on it. We shook on it and made the deal happen. So those are the framing, the terminology to use when you're talking to sellers about this.
I like that, Nate. You a beast. Nate is the evil scientist when it comes to these scripts and putting stuff together. Good question, though, Russell.
Yeah, that's great, Russell.
Stuart, hey, please tell us how you record your trust. Oh, I like that one.
Everything is handled for me through the title company, so I don't have like a magic recipe for it. Chris?
Yeah, well, we will never record a trust. I would never do that.
Oh, you don't actually record it with the county recorder's office. It's just signed trustee, beneficial interest, etc. At closing, that's it.
And where does that trust go, Nate, so Stuart can have a good mental visual of where it goes?
It sits with the trustee. It sits in my attorney's office for me.
So Nate has a trustee. I have not found an attorney out here. Out here, attorneys don't want to be on the hook to close it and be the trustee. You know, it's just a conflict of interest from what I've run into. But the trust stays in the file cabinet. It never gets recorded. Well, I'm going to ask Nate. Mine doesn't get recorded. Does yours get recorded, Nate?
Not the trust, but the deed. The deed gets recorded if there is a transfer of deed of any kind. But the trust itself, if the seller already did the trust, if they transferred the property to the trust, now it's in the trust. The trust doesn't go anywhere else besides the trustee's office.
There you go. And I'm sure Nate, or do you keep a copy of it, Nate?
Yeah, we get scanned copies of everything.
So Nate, so for conversation purposes, what is it? Stuart, Nate has a copy of it too. So it's not like he can't put his hands on it, but it's not for public record.
Mm-hmm.
Chuck T, how much money would be advisable on hand even when doing a subject to a wrap?
So Chuck, it depends on if you're going after houses that need work or if they don't need work. If you go after pretty houses, which I tend to get more of when I'm doing these subject to type properties, you don't need a lot of cash on hand. But how much would I want? I'd want enough to cover a few months of payments just in case I couldn't find my renter plus the repairs. So I'd want to have enough money for any kind of repairs plus a few months of payments if I had to.
Repairs and payment. Yeah, you're gonna have to. Yep, you're gonna have a little bit of money. Do you always give the seller something, Nate, or sometimes you would walk away with giving them no money?
I try as hard as I can not to give money because, and I'm very honest. I tell the seller like, hey, here's what I'm going to be doing on my end. I'm going to be paying for XYZ repairs. I got to make sure the mortgage is paid. Even if I don't find my tenant buyer, I got to make sure this stuff happens. So I got to make sure that I make good on my word. So if I hand you a bunch of cash right now, like then I'm going to be tight on my end. So I'd much rather that I hit this long-term agreement that we have than try to do something short-sighted. So I put it all on the table with them and tell them giving a bunch of cash up front is not an option. If they really press for it, then I'll ask them, well, what is it that you need it for? And if they say it's usually I need to move to another house, then I'm known to do deals like I'll pay for the move truck. Moving truck's on me. No problem. You need a couple guys here to help too? Okay, that's on me. No problem. But if they need a bunch of cash, then I pull back as much as possible.
Gotcha. I like the way you frame that up. That's not an option. It's not an option. Never heard it done like that. Nate, you too much. Ultimate Bargains question. Have you ever had problems with a former owner revoking a limited power of attorney?
Ultimate Bargains hasn't hit me. Has it hit you?
Yeah, I have. Yep. They go down there and put a revoke. Yeah, they can revoke it from you. They get pissed.
And then what happens?
I'm trying to remember the one. I can't even. I don't even remember. I just remember somebody getting mad and they revoked it. Maybe they revoked it with the bank or something. I can't remember.
But it didn't take away your position in the property. It just takes away your ability to change stuff, I assume.
Yeah, because I still had the authorization too. So you get the authorization and the POA. Yeah, I remember that lady revoked me. We're also on we did that one. Record the trust. You good on time, Nate? You good, brother?
Yeah, I'm good. Another 10 minutes or so myself.
Okay, cool. Chuck T, how much money? Oh, we did that one. Subject to. What's the difference between DG? What's the difference between wrap and subject to? Did we cover that one already, Nate?
Not yet. So DJ. So the difference is this: subject to, you're literally just stepping in and having the deed transferred to you, subject to the existing mortgage. So if the existing mortgage is a payment of $900 per month, then you're just saying, you know what, I'm taking over. I'm going to write that $900 check per month to the bank, and then we're done. We're clean. A wrap mortgage works. It does the same thing, but it's one more step. What the wrap is doing is your attorney is going to write it up so that you're making in your agreement that you're liable, or your entity, your trust is liable to make this payment each month to the seller. Now, it doesn't physically have to go to the seller, but the way that the wrap is written is that it usually will go to the seller or the seller's beneficial interest, so to speak. And then what it's doing is it's separating you from saying you are the person that's taking over this mortgage. It's moving it one more layer. And then that gets recorded behind the existing mortgage. That's why it's called a wrap, or a wraparound mortgage. Does that make sense, Chris, do you think, or should we simplify it more?
No, I think we get, for time purposes, that's fine. I just want to make sure our listeners understand that the seller has to continue to pay. If you're doing it like that, you got to make sure that they're paying the mortgage.
Yeah. Yeah, and what our attorney does is, even though it says we're supposed to pay the seller, another clause says on behalf of the seller, we're going to send this much money to the bank each month, blah, blah, blah. And it happens to be the same exact amount as they owe the bank. So we're still writing the check to the bank. It just, the framing of it is different.
Gotcha. I got to get a little deep into that later, Nate. I don't know how in the world you're doing that. Chuck T, insurance. Magnum. What type of insurance do you get for wholesaling? Never heard of that one.
This is another day broadcast.
But that's another one. That's right. We did say that.
I'll tell you really fast. Just general liability insurance. It's kind of like having an umbrella over your entity. I had an inspector slip and fall. An inspector. a buyer's inspector, and the buyer's inspector got a ambulance chaser attorney and tried to name everybody, even though I had no liability. When your name gets thrown on something, then you got to defend. So thank God I had an insurance company. Insurance handled it.
Good for you. Ultimate Bargains, how do you handle the real estate agent that was retained by the seller? I'm presuming on a subject too.
Awesome. So Ultimate Bargains, I let the seller know that if they have a contract of any kind with any agent or anybody else, they've got to make good on that contract. So if I'm going to make them an offer of some kind, they've got to account for what they need to pay other people. So let's just say, though, that there is an agent in the deal and you really want the deal and you want it all to go through. You and I and Chris and everybody listening knows that if there is an agent in the middle and you want that to go through, you're going to have to make sure that the agent is paid some way, shape, or form. So you just factor then that money is going to end up being some cash out of pocket.
Yep.
I try to get them to see the big picture. So if the agents, if I can get them on the phone, then I'll say, hey, look, normally when we do these, don't give a lot of cash, if any, out of pocket up front. But on this one, I'm willing to get you a little bit now. And then when we close this thing out on year 3, year 5, whenever it is, you'll get your big payday then. That's when you get your 3%. So I try to connect them to that.
Nice. Last question, Nate, then we'll wrap it up. Mark Archer from Jacksonville. What do you would you live in a subject to or lease option? Because I live in an apartment.
Mark, absolutely. Yeah. Why not? I'm thinking of any legal reason why you wouldn't, but no, why not? I absolutely would. There's actually one of my mentors. He believes for your personal residence, it's even better to go after someone that is not only a subject to, but a subject to default, meaning that they've already defaulted on their mortgage, and the bank is, through the long process of foreclosure, you can actually go take over that property for almost nothing and live in it for free, 6, 12 months, etc. So he preaches it. I don't preach that, but there's no reason why you couldn't do a lease option or subject to for your personal residence.
Yeah, Mark, I do. I live in a subject to, so
there you have it.
Yeah. Final thoughts, my brother Nate. If you want to get in touch with Nate, once again, we're not here pushing anything. I just put his information to his site in the video description below. You can head on over there to it. Final thoughts, Nate, on somebody that's nervous about doing subject to. What can you tell them real fast before you get out of here to push them over the edge?
Yeah. So think about this. In the good book, Moses had one way of thinking that got his people out of slavery, right? But that Moses never actually got to the promised land. He was stuck in one way of thinking, and it wasn't until the next generation, the new thinking, were able to actually cross over out of the desert into the promised land. In real estate investing, especially when we get into this creative stuff, this old way of thinking, you might get stuck in the desert with that. And if you want to be able to actually do this more creative stuff, you've got to let yourself move forward and get some new knowledge inside your mind. That new knowledge will help move you from the desert to the promised land. So just don't get stuck like Moses did. He didn't get to see it.
Nice, good analogy. Okay, my Roundup family, thank you for joining us. Make sure you hit that like button and share with anybody that you think could possibly benefit from this information. Subscribe to my channel, and I will see you on here throughout the quarantine. Hopefully things will loosen up a little bit soon. My friend Nate, good to see you, my friend.
All right, see you later, Chris. Thanks, guys.